What a volatile session in the last 8 hours as we start to see whipsaw around the global markets. Before the end of yesterday US session, the major US stock indices were trading in the slight risk-off mode as 3 of them closed in the red due to a news flow stating that US President Trump/White House has ordered a key US Special Forces group to be ready to be deployed in the Middle East. But however, very interestingly, after the close of the US session, 15 minutes after the close of the US session, which is around 4:15 a.m. Singapore time, Trump made a dramatic remark stating that Iran has presented a gift to the US, stating that they are now in a potential diplomacy balancing act where Iran and US are in the process of negotiation a ceasefire. That created a rally in the S&P 500 E-mini futures and the Nasdaq 100 E-mini futures by around 0.8% as we're speaking right now, and creating a positive feedback loop into the Asia Pacific stock indices as well. But however, the rally has now is showing a bit of stalling at their respective key pivotal resistance that we highlighted yesterday. And on the other hand, we do not see a broad-based sell-off in the major US dollar pair as the US dollar index continues to hold firmly above its key 20-day moving average. That also bearing in mind that we also start to see a slight sell-off in the West Texas crude oil, but also managed to be held holding above that $85 per barrel, which is also right at the 20-day moving average. So welcome back to today's daily dose of market insights, which is going to be another volatile session heading forward as various conflicting narrative headlines is actually taking hold right now, causing wild whipsaw across the board. So before we kickstart today's gist of the daily dose, let's have a quick look at the disclaimer first. All right, so today will be the Wednesday, the 25th of March, 2026. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. Okay, so here we go. So let's have a recap what has taken shape yesterday and as well as in today's early Asia session in terms of news flow and relevant data releases. All right, so hopefully the screen is good. Okay, so now let me take you through the other screen over here. All right, so this is the movement of the US stock indices yesterday. So the S&P, by the time when the US session ended, which is at 4 a.m. Singapore time this morning, it ended down negative 0.37%. The Nasdaq fared slightly worse, down negative 0.77%. The Dow Jones Industrial Average down marginally negative 0.18%. The Russell 2000 is the one that is kind of holding the fort up positive by 0.45%. But what's interesting over here is that the E-mini futures that are trading on Globex, the Globex exchange, which is right after the close of the US session at 5 a.m. Singapore time, it kickstarted. So there was actually a gap up over here. So it hit a high of what 6,668 on the S&P E-mini futures. But after that, it's down slightly lower as market participants digest that conflicting news flow that is surrounding in the marketplace, that is headlining the marketplace right now. And the Nasdaq 100 E-mini futures is also managed to gap up in today's Asia session. But however, the gains has started to dwindle downwards over here. Right now, up at both of the E-mini futures and the Nasdaq 100 E-mini futures are up by around 0.5% as we're speaking right now at the first half of the Asia session today, which is at 11:08 a.m. Singapore time. And what's interesting over here is that this particular yo-yo movement in the last 8 hours was caused by this two conflicting set of news flow. Firstly, the White House has ordered US troops to be on the standby and deploy this one of these special forces military, which is the 82nd Airborne Division, to be deployed by around 2,000 soldiers to the Middle East, according to a person familiar with the matter. So that actually indicates signs that there could be a ground invasion pretty much soon in Iran, right, by the deployment of this special forces division, which the 82nd Airborne Division to the Middle East. And what's interesting over here is that by the time the US session closed, where liquidity is lesser at that point in time, there's this news flows out from the White House, which Trump actually made a speech over here to the report to the media. So let me expand the screen so that you guys could see. Right, he stated that President Donald Trump signaled that Iran has offered a present. What present is he didn't actually mention. As a show of good faith in negotiation, he has claimed are ongoing to potentially end a 25-day conflict at this point in time. So he will not detail the gift, but he keeps saying that it's worth a tremendous amount of money, but confirmed that it was related to energy flows through the Straits of Hormuz. So by stating that, market implied that US and Iran seems to has reached a tipping point in this ongoing conflict that is we call it unfolding right now, stating that there could be a potential ceasefire end. But we got to ask ourselves, if there's going to be a potential ceasefire, why do US need to send troops to the Middle East? I mean, is that that's really a conflicting message? And because of this confusion, market participants now are digesting this news and tend to tone down the risk on behavior that was seen earlier at 4:15 a.m. Singapore time until 9 a.m. Singapore time in the last 4 to 5 hours or so. And that has been pretty much evidence in the FX market. So if you look at the FX market over here, we look at the US dollar index. So the US dollar index managed to stage a rebound as we are speaking. So this is right now, right now, at the bounce of the key near-term support level of the 99 in level, which is a psychological level, and this 99 level also confluence with the 20-day moving average, and as well as this current multi-week or 3 months plus of ascending trendline support from its significant low of 27th of January this year, which is also the year-to-date low. So this is the US dollar index. So the US dollar index is not showing a clear sign of a risk on behavior yet. And if you look at the 5-day rolling performance of the dollar against other major currency, the dollar is now showing signs of rebounding. So if you look at the 5-day trend, it seems to be more of a flattish trend. And if you look at the 1-day rolling performance of the dollar, that means taking into account of the 24 hours, the last 24 hours, the dollar has been strengthening up as well over here. All right, so the dollar is now the strongest based on the 1-day rolling performance as we are speaking right now, 11:12 a.m. Singapore time on a Wednesday, 25th of March 2026. The dollar is the strongest against the Aussie, up by 0.23%. And bearing in mind, the Aussie is also being used as a risk-on, risk-off proxy. So if the dollar is strengthening against the Aussie, there is no clear sign of a risk-on behavior yet, despite this particular news flow where US President Donald Trump claimed that Iran has given them a present, kind of in good faith, to potentially state that they are in the process of negotiation for a potential ceasefire. Then what we could see over here is that over in Asia right now, the other later I'll share you the Asia Pacific stock market. Yes, even though all of them in the headline are deeply in the green, where the Nikkei 225 is up by 2.6%, the Hang Seng only marginally 0.24%, and the other Asia Pacific currency up by the Australia ASX 200 up by 1.86%, the Kospi up by 1.58%, and the STI is up by 0.45%. The Hang Seng and the Nikkei 225 struggled at our pivotal resistance, which we highlighted earlier as well over here. And over the key thing that is driving the prices will be oil price. So we start to see oil price didn't actually tumble that much. All right. So if you look at on Monday, this is where US President Trump stated on his social media to actually pause that that what I call that 48 hours deadline, or then thereafter there will be a US offensive against Iranian power supply infrastructure, and stated that there is actually an ongoing negotiation process between stakeholders in US and Iran. And he also mentioned at that point in time that the US administration is speaking to a top leader in Iran. We are specifying who the leader is. So WTI crude oil prices tumbled at that point in time on Monday, negative 9%. But however, yesterday's news flow failed to stage a dramatic sell-off in the West Texas crude oil, which is the WTI crude oil, only down marginally 0.6%, negative 0.6%. And in today's Asia session, it's almost unchanged due to this claim that US President Trump stated that Iran has given a present to the US in good faith. So overall, the West Texas crude oil market is not showing sign of a potential de-escalation in the US-Iran / Israel conflict, and also not showing pretty much of a sell-off, and also still holding on its 20-day moving average. All right, over here. And with that in play, market participants in the Fed funds futures market is also signaling stagflation risk is still pretty much intact in the fixed income market in the US, which is the government fixed income market. So by looking at the CME Fed Watch 2, so this is the CME Fed Watch 2. So for those who followed my daily dose, this shouldn't be quite alien to you guys. So this is where I tend to take a look at what is the pricing behavior like of the Fed funds futures traders, and from there we could actually have a gauge whether the Fed is on a dovish path, a hawkish path, or wait and see path. So if you look at the aggregated tab over here on this CME Fed Watch 2, so this represents the top here is the current Fed funds rate, the various Fed funds rate. So the Fed funds rate right now is at 3.5% to 3.75%. So a quick recap: the Fed has been on hold since cutting interest rate 3 times late last year. All right, it has been held in the first 2 meetings of this year. So the next meeting on the 29th of April 2026, or April the 29th. So this is American date. So the first digit that you see here is a month, date, year. So April 29, 2026 FOMC meeting, high chance that the Fed will be on hold. So in fact, what the Fed funds futures trader right now are signaling that the Fed will be pretty much on hold for the entire remaining months of this year. So if you look at the last meeting date, which is on the December the 9th, 2026, 60% chance that the Fed funds futures traders is expecting the Fed to be on hold. But however, there's an increase of a hawkish vibe coming into play. So there's a jump of 40% or 39.68%, I round up to 40. There's a jump of yesterday was around 10% or so. So based on the latest price action, there's a jump of around 40% that the Fed funds futures trader is expecting the Fed to hike rates, to hike rates by another 25 basis points, by 3.75% to 4% on the last meeting of this year, 9th of December. And if you look down the calendar, the next interest rate cut will be pushed all the way down until the last meeting of next year, which has a higher chance of 70% on the December the 8th, 2027 FOMC meeting. So what we could see over here is that the interest rate market in the US is also not pricing in a liquidity loosening condition in the US economy. And in fact, it started to price in a slightly hawkish tilt yesterday by having a 39% chance or 40% chance that the Fed may hike rates on the last meeting of this year, and a 31% chance that it may hike rate on the October the 28th meeting this year. So what we could see over here is more of not a dovish tilt, but rather a whole and slightly hawkish tilt. So that also doesn't consider as a totally risk-on impact in the market at all. All right, so that could also potentially see that the Fed could actually tighten liquidity given of the stagflation risk that is the market. So what we could see right now over here is that there's a conflicting movement in the market. So if we pierce together the various we call it intermarket correlation together, it doesn't paint us a full risk-on picture yet. Number one, the West Texas crude oil is still holding above its 20-day moving average. We don't see a broad-based sell-off in the US dollar right now as we are speaking, despite that news flow saying that US President Trump himself claimed that he received a present from Iran. And if you look at the Fed Funds futures market, the Fed Funds futures trader is not pricing in a dovish Fed. In fact, it's pricing in a slightly hawkish Fed in the later part of this year, which there could be a 30% chance and a 39% chance that the Fed may hike rates in October and December FOMC meeting. All right, so this is a very first segment I want to share you guys to pierce together what is going on in this conflicting narrative, headline-driven markets over here. And in today's Asia session, there's also another news flow that I want to share you guys. Is pertaining to the Australia inflation trend over here. So in Australia, at 8:30 a.m. Singapore time, there was this release of this RBA trim-min CPI data. So this trim-min CPI data is equivalent to a core CPI. I don't know why they call it trim-min. So it's like a core CPI stripping off energy and food. So core CPI for Australia or trim-min CPI for Australia for February came in slightly lower than expectation. So it was 3.3%. Market is expecting at 3.4%. So with this slight dip in inflation trend in the Australia, there's actually a slight near-term bearish tilt towards the Aussie dollar. So the Aussie dollar failed to also break above our short-term pivotal resistance level, which also failed to break above its 20-day moving average. So that I'll share with you the key levels to look out for on the Aussie dollar. All right, so that's pretty much sum up the gist of the first segment of the daily dose. So let me now move on to the second segment, which is the intraday technical outlook segment. All right, so with that, let me expand the chart so that you guys could have a better view. All right, good. So let us start with the FX market. Okay, so starting with the euro dollar. All right, so the euro dollar also struggled at the 20-day moving average over here. So what we could see is that the hourly RSI also continues to be kept by resistance level. Okay, yesterday we do have a pivotal resistance at 116.73. So this level still remains the same, no change, 116.73. So still looking for a potential push down as it's going to trade in this complex sideways range configuration, which is we call it a expanding wedge since the low of 13th of March this year. All right. So for today, there's actually a support level that is slightly higher to look out for, which is very close to yesterday's US session low at 115.73. Let me put it in writing. 1.1573. Okay, so still maintain that intraday bearish bias on the euro dollar within this complex minor sideways range configuration that is unfolding, which is a minor expanding wedge since the low of 13th of March. Pivotal resistance remains the same at 116.73. First support level to watch will be yesterday's US session low, which is this congestion area here since last Friday that is being formed at 115.73. Breaking down below 115.73 will potentially expose the minor expanding wedge range support area at 115.20/114.95. A bullish breakout above 116.73 and an hourly close above it will see an extension of this rebound unfolding, exposing the next intermediate resistance level at 117.40, followed by 118.30, which is the minor swing high area of 26th of February and 27th of February. Next will be the sterling dollar, the sterling against the pound. So the sterling dollar also came down, hit our first support level at 135.70 before staging a rebound during the late hours of the US session yesterday, but failed to break above the 200-day moving average, which also correspond with our pivotal resistance that we have yesterday. So no change, maintain that mild bearish bias on the sterling dollar as it continues to trap within this sideways range configuration as well since the low of 13th of March. So still using 134.50 as my short-term pivotal resistance level, maintain that mild bearish bias. First support level to watch for sure will be 135.70, which is managed to find some fault yesterday, and breaking below 135.70 will expose the lower limit of this complex sideways range configuration, now at the next intermediate support at 132.60. Only a bullish breakout and hourly close above 134.50 will invalidate today's bearish bias view to see a squeeze up towards 135.05, which is the 50-day moving average. Above it, see a deeper rebound towards 135.78 next, which is the minor swing high area of 18th of February and 26th of February. So that will be the sterling dollar. Onward next will be the Aussie dollar. Let me expand the screen. Okay, so the Aussie dollar failed to rally above the 20-day moving average and also failed to go past above the 50-day moving average in today's Asia session. After this bounce here at 4 a.m. Singapore time is where the news flow coming out from US President Trump claiming that Iran has given a present to US. All right, so over here we see continuation of price action negativity, price action bearishness on the Aussie dollar on the intraday basis. So what we could do over here is that no change in terms of the levels. So yesterday you also did a yesterday it can't surpass 70.27, our adjusted short-term pivotal resistance level. So we'll be still looking for a bearish bias tilt today on the intraday basis on the Aussie dollar using 70.27 short-term pivotal resistance level. Support level to watch in this bearish bias tilt will be my medium-term pivotal support at 69.10, where it managed to stage that sharp intraday recovery on Monday. Only breaking below 69.10 may see a much more further weakness towards 68.38 next, which is the 1.382 Fibo extension on the downside in this ongoing corrective decline sequence that is taking shape since the high of 11th of March. Only a bullish breakout and hourly close above 70.27 will invalidate today's bearish bias view to see a squeeze up back to retest the 20-day moving average at 70.64. Above 70.64, it may gain traction towards the upper limit of this range at 71.20, 71.40 resistance zone. So that's for the dollar yen. And that's for the Aussie dollar, pardon me. So that's for the Aussie dollar, still maintaining that bearish bias using 70.27 short-term pivotal resistance. First support level to watch will be the medium-term pivotal support at 69.10, where it managed to stall on Monday. Okay, next up will be the dollar yen. So the dollar yen continues to be trapped within this symmetrical triangle range configuration that has been in place since 19th of March. All right, the symmetrical triangle range. So no change. Price action on Monday, price action on Tuesday after the close of the US session managed to find support at our pivotal support zone, which we highlighted yesterday, 158.30/158 figure level after that news flow coming out from US President Trump claiming that Iran has gave a gift to the US. So it continues to be range bound within the medium minor symmetrical triangle range that has been in place since 19th of March. So using the lower limit of the range, which is so confluencing very closely with the 20-day moving average, no change to the pivotal support zone, 158.30, 158 figure level, maintain this bullish bias towards the upper limit of the range at 159.60. Only breaking above 159.60 may see a potential stronger push up to test 160.23/160.74, which is a key intervention risk zone where previously in the past, once dollar yen hit this level at 160.23, 160.74, we see the dollar yen weaken due to previously intervention by the Japanese authority to sell dollar, buy back the yen. So this was over here, these two areas here. Okay, previously there's this sell off that was 29 April 2024, and over here as well, 10 July 2024. All right, at that point in time. So that was close to about 2 years ago. Okay, so that's will be for the dollar yen. All right, so now that sum up all the intraday technical outlook on the four major US dollar pair. So now let us proceed with the major stock indices, starting with the Hong Kong 33 that's representing the Hang Seng Index. So the Hong Kong 33 today has a gap up, so it gap up slightly above our pivotal resistance that we highlighted yesterday, 25,187, but can't maintain that bullish momentum as we are speaking right now, 11:29 a.m. Singapore time, as it reintegrate back below 25,187. So I'll take this as this earlier morning session gap up as an access, tolerate it to 25,380, still maintaining that bearish bias on the Hong Kong 33, indicating that today's bullish gap up could be a fake hit over here, given that there is no clear strength of there's no pronounced dollar sell-off as we highlighted earlier in the four major US dollar pair. So 25,187 / the excess 380 short-term pivotal resistance level for today, maintaining it our bearish bias. First support level will be higher, which is the former long-term pivotal support that got taken down on Monday. So that will be at 24,765. Breaking below 24,765 exposes this Monday swing low area at 24,257. Only a bullish breakout above 25,380 will see the rebound extending towards the key 20-day / 200-day intermediate resistance zone at 25,650, 25,800. We also confluence with the ongoing 3 months plus, coming to 3 months of descending channel since the high of 29th of January. Breaking above 25,800 will potentially signal a much more pronounced recovery to retest the 50-day moving average, coming close at 26,224, which also is the minor swing high area of 3rd of March, 11th of March, and as well as 17th of March. So next up will be the Nikkei 225, which is also the Japan 225, which is representing the Nikkei 225. So the Japan 225 rally also stopped at our this resistance level that we highlighted, 53,628. Yeah, this level here. Okay, give me a minute. Let me highlight it. Okay, so this is the level 53,628 that we have yesterday, and so it also stopped at this ongoing 3 months plus, no 2 months, 1 month plus of descending channel that has been in place since the high of 26th of February, which is the all-time high area at 60,075. And what we could see over here is that we will still maintain that bearish bias view with an access at 54,335 over here. First support level to watch will be at 51,900, which was yesterday's Asia session low over here. Breaking below 51,900 will allow the bears to gain more traction to retest this Monday swing low area at 50,630, 50,160. Only a bullish breakout above 54,335. That is also breaking out above this descent 1 month plus of descending channel resistance will allow the shorter term boost to come into play, exposing the next two intermediate resistance level. In the first step, 55,130 that confluence with the 20-day and the 50-day moving average, followed by 56,460. Right, so that's for the Japan 225. Still maintaining a bearish bias using 54,355 as my short-term pivotal resistance for today. Next will be the Germany 30 that is representing the German DAX. So the Germany 30 also did a bearish reaction right exactly below our pivotal resistance that we have yesterday, 23,280. That also confluence with this ongoing 1 month plus of descending channel in place since the high of 27th of February. So no change, maintain that bearish bias, but with a higher support level to watch for today, which is yesterday's US session low at 22,430. Only breaking below 22,430 may expose further weakness towards 21,930, 21,830. So take it as the 22,430 as a downside trigger level. Bullish breakout above 23,280, invalidate today's bearish bias view to see a squeeze up towards 23,930, maximum 24,300, which is conversing with the 50-day moving average as well. Let us now take a look at the three major US stock indices, starting with the US Wall Street 30 that's representing the Dow Jones Industrial Average. So yesterday we have a pivotal resistance, 46,710. In today's Asia session, the rally stopped at 46,710, also stopped exactly at the 200-day moving average. So still maintaining that bearish bias, but with a downside trigger level, which is yesterday's US session low at 45,940. Breaking below 45,940 may expose further weakness to revisit the swing low area here of this Monday, 45,237, 45,190, which show confluence with the 1.236 Fibo extension of this ongoing corrective decline since the all-time high of 10th of February this year. Only a bullish breakout and hourly close above 46,710 will invalidate today's bearish bias view to see the continuation of the rally heading towards the 20-day moving average at 47,388. Breaking above 47,388 may seek out a deeper pronounced mean reversion rally towards 47,930, which confluence with this medium-term descending channel resistance taken from the current all-time high of 11th of February. Right, so that's for the US Wall Street 30. Okay, next up will be the S&P 500. So the S&P 500 also did that bearish, we call it reaction in today's Asia session at the 6,648 short-term pivotal resistance level, which is also the 200-day moving average over here. So what we could see is that price action is not so convinced yet of the news flow that is coming out from the US President Trump, claiming that Iran has given a present to US. So still maintaining that bearish bias view, but with a downside trigger level for today at 6,540, which is the US session low yesterday. 6,648 maintain that short-term pivotal resistance. Breaking below 6,540 downside trigger level exposes this Monday swing low area in first step 6,470, 6,442. Only a bullish breakout above 6,648 invalidate the bearish bias view for the continuation of the rebound to test 6,718. Above it, seek out 6,764, which is the swing high area of 17th of March and 18th of March. Lastly will be the Nasdaq 100. So the Nasdaq 100 also the rally during the close, after the close of the US session, also paused at our first resistance level, 24,280. Its high was at 24,376, slightly below the short-term pivotal resistance that we highlighted yesterday, 24,453, 24,549. So this level was still, this pivotal resistance zone will still be used for today. We saw confluence with the 200-day moving average. So still maintain our bearish bias view on the Nasdaq 100 with additional downside trigger level that we added today, 24,017, which was yesterday's US session low as well. Breaking below 24,017 may seek out the Monday swing low area at 23,645 in first step. Only a bullish breakout above 24,453, 24,549 will indicate the extension of this mean reversion rebound towards 24,787, which is the medium-term resistance trend line from the high of 28th of January this year. Breaking above 24,787 will see a deeper rebound towards 25,020 minus swing high of 18th of March and confluencing with the 50-day moving average. All right, so that pretty much sum up the outlook on the major stock indices. So it seems to us that earlier today's Asia session rally, which is right after the close of the US session at 4:15 a.m. Singapore time, seems to have dwindled off at their respective key pivotal resistance level or resistance zone. Next will be the commodity market, starting with gold XAU/USD. So gold also did a squeeze up over here. It broke above our pivotal resistance level at around the 4,500 level, but right now it's heading up towards our medium-term pivotal resistance zone at 4,736, 4,775. We also confluence with this descending trend line from the high of 12th of March, and 4,736, 4,775 also correspond with this Fibo retracement level of the previous sell-off from the high of 10th of March all the way down to this Monday's swing low. So if you do the Fibo retracement, okay, give me a minute. Okay, that coincide of the golden ratio, and it's 0.618 golden ratio, and it's now coming very close to the 61.8% Fibonacci ratio, or the golden ratio. And right now the rally is coming very close to the 50% retracement at 4,670. So with that, given that the squeeze out of here is coming very close to some key resistance zone that is being defined by a different element, so I will not be so bullish to play this push up in this residual push up potentially, because of the risk reward ratio is not so perspective. So instead, I will try to fade that strength as it approaches 4,670, using 4,736, 4,775 as my medium-term pivotal resistance zone to fade this strength. First support level to watch will be at 4,440, which is very close to yesterday's pivotal support, now turns in pivotal resistance, now turns into a key pullback support level. And this 4,440, if we do a minor trend line support level drawn from the low of Monday over here, that also confluence with this minor descending trend line. So hence, breaking below 4,440 will kind of eradicate this rebound that has been taking shape since Monday and flip the buyers back to the continuation of this impulsive bearish down move sequence in place since the high of 2nd of March to expose the next near-term support level at 4,274 in the first step, followed by the swing low area of Monday, 4,167/4,093. Only a bullish breakout above the pivotal resistance of 4,736, 4,775 that would invalidate the bearish bias view and kickstart a much more pronounced mean reversion rebound scenario back up towards the 50-day and the 20-day moving average, confluencing at the next resistance level at 4,980, which is very close to the psychological 5,000 level. So that's for Gold XAU/USD. Looking out for an opportunity to fit this strength coming close to the 4,670 level using 4,736, 4,775 medium-term pivotal resistance zone. Next will be the West Texas crude oil over here. So let me go to the hourly chart of the West Texas crude oil. So the West Texas crude oil continues to hold our short-term pivotal support zone that we highlighted yesterday, 88.36, 88.50. So still no change, still going to look out for a potential bounce back up again using 88.36, 85.50 short-term pivotal support zone, maintain that bullish bias on the intraday basis. First resistance level to watch was yesterday's swing high area that also got rejected after breaking below the former range support level of around 92.8, 93 level. So that is 93.70 after tidying up, taking into account of yesterday's price action. Okay, so breaking above 93.60 will potentially take us up higher to this Monday's swing high area at 102.25 in the first step. Only breaking below 85.50 will invalidate this recovery scenario on West Texas crude oil for today and see a further weakness or a further mean decline scenario exposing the next near-term support level at 81.85, followed by 77.26, 76.83, which confluence with the 11th of March swing low area. All right, so that sum up all the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the other key data to look out for today? So today at 3 p.m. Singapore time, we'll have core inflation rate coming out from UK. Market participants expecting a rather elevated level at the same pace of last month, January print of 3.1%. So market is expecting it at 3.1% as well. So that could potentially influence the movement of the sterling dollar and the sterling crosses thereafter, after the release of the core inflation rate at 3 p.m. Singapore time. And going into the European session, we have ECB President Lagarde's public speech later at 4:45 p.m. that could influence the movement of the euro dollar and the euro crosses. And at 5 p.m. we have business sentiment up from Germany. They call it the Info Business Climate 5 p.m. Singapore time. Market is expecting a slight dip to, that's for the month of March, to 86.1 from previous February print of 88.6. So that could potentially influence the Germany 30 CFD index that's representing the German DAX over here. Then at 5:15 p.m. we have another ECB official speaking, ECB late. And as we head down towards the US session, it will be pretty much quiet, except for another ECB official speaking, ECB Theo Minen. All right, so it seems to be that some ECB banking conference where we see a slew of ECB officials speaking today. So that will be at 10:30 p.m. Singapore time. And at the same time, 10:30 p.m. Singapore time, we have the weekly EIA crude oil stockpile change. So that's something to look out for as well. That could actually influence the movement of the West Texas crude oil. So that will be at 10:30 p.m. Singapore time. And that pretty much it. So coming towards the start of the Asia session tomorrow, before the start of daily dose at 11 a.m. So tomorrow, early Thursday, March the 26th at 4:10 a.m. Singapore time, you have Federal Reserve official Fed Mirren speaking. So I believe that Fed Mirren speech will be pretty much not so interesting, because this guy tends to be ultra dovish, given the fact that he's part of the US White House administration previously. And at 6:15 a.m. we have a RBA official speaking, RBA Ken, that could potentially influence the Aussie dollar and the Aussie crosses tomorrow at 6:15 a.m. Singapore time. So that sum up today's daily dose of market insights. So do practice proper risk management, as it's now pretty much evidence that the market is being driven in a very near term by headline news flow coming out from the ongoing US-Israel-Iran conflict. So with that, I wish you guys a great day ahead, and we shall speak again tomorrow. Thank you.